Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Okay, another day, another high. Drifting higher, we kept saying that even though it looks parabolic, guys, we still are not extreme in any sense or in any way. Like it looks bad, but we don't have any extremes in the oscillators, in the sentiment, and anything. We can still drift higher. This is why we have another day, another high, and everybody's waiting for a move to come down, including myself. But yet we can still drift higher. Money is pouring into this market. Okay, so we have, of course, the chart of the S&P 500 here. We finish at highs. This is Wednesday, the 13th of May, 2026. Okay, another high. That's how it goes. We're drifting higher because no real news is coming out to derail this market, and people are still piling into the big trades. Okay, that's the way it goes. Okay, so we always do our technical analysis first, and guys, still bullish. We went to new highs. Nothing more to say on the technicals. It's bullish. That's the easiest part of the day. Bullish. Okay, but we're also paired with a sentiment, and we're still stuck around the 66, 67 level. Okay, everything is the same. This is like Groundhog Day. We're repeating it. Another day, another high. Still some calls being bought, yet apparently not enough to derail this market. We are not at extremes. And how do we know that? Because the market keeps going higher. Any move down is being bought. Okay, this is not, one day it's going to crack. Okay, just not today. And the sentiment is still not at extremes. We can still go higher. Okay, this is the crazy part. I keep saying it looks parabolic, but there's no extremes here in this parabola, if you will. Okay, we can still drift higher. That's why another day, another high. It could be the same thing tomorrow. We don't know. Okay, so we just have to wait. Okay, that's it. Just be prepared. We're net long, so we're participating, but we're always wary of a knockdown, which would be nice. If we're bulls, we want that. I want a nice drop before going higher, but we might not get it. Who knows? Let's see. See what happens. Okay. We did have a macro print today, an important one. Okay. The PPI came out, the producer price index. Okay. And it came in massively hot. Here's the PPI. Came in at 1.4%. Last month it was 0.7. Okay. That's the producer price inflation PPI. And what scared more people is the core PPI. Came in at 1% compared to 0.2%. See, before, the past couple of months in March and February, maybe a little bit of a scare in January, but in March and February, people were seeing that the producer prices in terms of the core prices, stripping out food and energy, were pretty muted. So we could pretty much say that this war, that it was based on the war. Okay, but not today. Now we have core ripping up to 1%. So even more. That's probably like the chips are saying is the semiconductors, because we see it in the charts. So this is supporting our argument from yesterday that we said that inflation is starting to creep in. It's not a problem yet. Okay, but inflation is creeping in. We're seeing it everywhere. Okay, not just in producer prices. Okay, we saw it. Well, silver starts ripping past couple of days. Why? It's even up today. Another 1% on silver. It's the same story as yesterday. Okay, we had copper ripping, but today it's like sort of at the highs, still high, because when you have copper and of course oil, copper and oil are the two canaries in the coal mine. First oil, then copper. Okay, because it's Dr. Copper, it's the economy. So when copper goes up, you know something's wrong. And oil, that's muted. We know it's all because of the war. So oil is high. Doesn't even oil can go down to 80. It's still pretty high. Okay, in terms of inflation. So we have the PPI showing itself very, very hot. We have inflation in the marketplace, okay? But the market is shrugging it off because Trump better make a deal. He has to make a deal because this is not looking good. If you have commodity inflation as well as price inflation going up in services and across the board now, because even the core PPI is up, okay? You have to be worried. Not right away, because the market's telling you not right now, but eventually. So right now, if Trump doesn't do anything or just status quo for another 2, 3, 4 weeks, this market is going to start saying, maybe we're going to get into an interest rate hiking cycle. Even though we confirmed Warsh as the new Fed chair, he's going to be independent. He's not going to do what Trump wants. Okay, there could be a falling out. So the inflation story is big. Keep an eye on it. Although not right away. It's something for down the road, okay? So it's basically like a time bomb. Trump has to make a deal quickly with Iran or the time bomb will go off. That's the way it is. So another day, another high. That's exactly what it means. So let's go to, I thought that today we'd go through some of our trades, okay, because it's basically the same. We went through oil, we went through gold, we went through all of these copper and the commodities. It's basically the same as yesterday. So let's go through some trades that we did. Okay, first, we talked about Shopify, the SaaS companies. Okay, I think Shopify move might be done. Okay, today I entered a trade in Shopify on the long side. We are approaching this 91-ish level, which is the previous high here from January 2024. You see every time it touched that, broke, it was significant. It it was resistance and then it broke. It served as support for a while-ish before going up. Okay, so I think it's a significant level and it might serve as support going forward, which I think it does, especially since we're down from like 180 to like 95, basically a 50% haircut in this stock. Okay, so I shorted the 90 put. Okay, I did the here on Shopify, a chart of the calls on the left side and the puts. I shorted the 90 put here for $4. Okay, so it's the reason I did it is because of this delta here. It's around a 20. I like to do it between 25 and 16 deltas. Okay, so there's basically a 23.9% chance, let's say a 24% chance that this finishes out of the money by June, which is in 36 days. There's only a 24% chance that it finishes in the money, which means I will lose. And of course, deltas change, but as things stand, after a big drop, this is a big move, okay? Because we have 55% implied volatility is big for Shopify. So I could have gone either way. I chose this for the higher premium. I could have gone to the 85 or the 90. I chose the 90. So I will mitigate it if it ever goes down there, okay? And remember, the first risk mitigation process is to go small. Don't go big, okay? Basically, 2 to 3% of your capital that, it's very, very small. Okay, and maybe up to 5% if you want to take possession, because I'm doing a naked put. I'm selling a naked put and I expect to take possession of it. I don't mind at these levels, especially if it's down after 50%, I can mitigate it. Okay, and it's not going to be a big percentage of my portfolio. So that's what I did. Today I shorted Shopify by selling a put at the 90 level. I bought Shopify. I shorted a put. Okay, selling a put means you're going along. So Shopify long. Okay, let's revisit the bane of my existence. Intel is sort of staying at the highs here, burning off some of this overbought condition, which is very, very overbought. Who cares? Doesn't matter. If overbought doesn't really mean anything at this level. Okay, and I am short a put of the 90 put, and I'm short the 88 call. I still have locked in a $2 loss here. If it ever goes down, it's an inverted spread, which means I'm in trouble. I want to get out of this flat. I might move this put up to the 95 level and out, maybe, let the call get called in and short puts on this stock because it is strong. Any kind of pullback, I'm looking to go long now if it ever pulls back in a meaningful way. But so far, this trade is a loser, and I'm still holding this trade alive. Expires at the end of May 29th. Okay, so we'll see what happens then. I will mitigate it as it goes forward. The next step is probably moving it up to the 95 because I've collected about $8.50 in credits. So basically, if I have the 88 call, which is what's making this loss big because I'm short at 88, but if you add in the $8.50 of premium, I'm really short at 96.5. Okay, so 96.5 is about this level right here. I'm really short at this level. So if it ever falls down and it gets to that price towards the end, I can get out of break even or a small loss. Okay, so that's what I'm looking to do in the Intel trade. And also, let's revisit our Tesla trade. We did a Tesla trade here. We shorted the 325 put. Okay, after earnings were announced, it settled around this price here, around 375. So we shorted the put at 325, and we also shorted the 465 call. It's getting tested, okay? So the next step right now is I will probably, if we get close to that, I will probably roll up the put, okay? I mean, I did roll up the put today. So what I did was I took this and I rolled it up to 365 and I collected a credit, okay? Now, if it continues to test it and go higher than the call, I will roll this up even higher, okay? And the credits collected so far for both the original 325, 465 strangle, plus the rolling up of the put here to 365, it expires in June, okay, the next month. It's about $13, $14 of credit, okay? So still looking forward to it. See what happens. It could drift lower, okay? So it saves us from having to roll it even higher, rolling this put even higher. So we don't know we're in monitoring mode, but right now we did one adjustment. It brought in some more credit. We could have gone higher, but I just want to see this through for a couple more days before rolling it higher if it gets tested even more. So let's see. I suspect we go back and drift back down to the 400, 413 level. I don't know. We will see. Okay. Again, small. It's not going to kill me if it ever goes back up and it hurts me. Okay. So that's it. We did the Tesla. We did the Intel here. We're still holding the 90.88 inverted strangle, and we took in a new position in Shopify at shorted the 90 level naked put. I'm fine being long at $90. I might roll it forward if it ever goes. Might roll it one more month and maybe get in at 75. But hey, being long at 75, if it ever goes down there, at Shopify, I'll be happy to take possession of the shares there. So let's recap, guys. Same thing, another day, another high. It's not extreme yet. We are not at extreme levels. We can still drift higher, especially since everybody is waiting for a pullback. It's doing exactly the opposite of what everybody thinks. This is a parabolic squeeze from hell, and it's continued to squeeze higher because we're not, the oscillators here are in the middle. Okay, any kind of a classic oscillator that you want to look at, you'll see we're not extreme in any way. Okay, we could still drift higher because look, it's a greed, but not so much so. Look, the market's drifting higher and it's still staying at the 66 level, never even approaching extreme greed like we had extreme fear during that meltdown here. Okay, not even at that extreme greed level. Okay, and of course the PPI came in super hot, even core PPI at 1%. This is a big print. Okay, it's telling you that inflation is coming into the system. Just like yesterday, we said inflation is creeping in. It's not a problem right now until it is. And this is like a warning sign. This canary in the coal mine. Trump has to pay attention to this because if he doesn't, the market will fall down because the Fed will be forced to hike at that point, and that's not going to be good, right? So let's see what happens the rest of the week and going forward. It should be exciting. Let's hope so. Later.